So hello guys, welcome to a new video, a new trade breakdown of how I caught a 1 to 12 risk to reward. As you can see right here, 1 to 12 risk to reward, and actually I don't know, maybe 5 maybe 6 days. It actually took long before it hit TP, but the game is to be patient as much as you can. So trading is a game of patience. You have to be patient always. I'm gonna show you, I'm gonna break down this trade. I'm gonna show you my trade management, how I manage this trade, how I knew it was gonna touch my TP, how I knew everything. I'm gonna break down everything for you guys, so stay tuned and let's get right into the analysis. So as you can see from the higher time frame, let's go to like the 24 hours. Let's go to the daily time frame and show you everything. So as you can see, since this pair of volatility was created, was launched in when I think it was February 2024, since it was created, it was dumping like crazy. So what, I was looking for sales. I was only looking for sales. So I have a higher time frame supply right here. As you can see, I have a higher time frame supply right here. I have a liquidity right here which got taken right here. As you can see, which got taken right here. So after I see the liquidity has been taken and with market started crashing, so I knew that the market was gonna reach that supply. So what I did, I went to the lower time frame. As you can see, I have my analysis back there. I went to the 1 hour direct, as you can see. So when I see that the market has breaking structures to the downside, breaking this structure, breaking this structure, breaking this structure. So let me delete this first. Let me delete the chart. Let me delete all the recordings on this chart first. Let me delete it all. Let me delete it and show you from the start what I was looking for. From the, it was actually 1 to 12 and it was actually pretty crazy. It took long before I had my TP, but patience, when you are patient enough, you're gonna make a lot of money, bro. So the market was breaking structures. As you can see, the market was breaking structures, but let me break it down, let me break it down, let me break it down. Delete. So as you can see right here, the market was in a clear downtrend. As you can see, the market was pretty crashing right here, making higher highs like this, making higher highs and lower lows, higher lows and lower lows, higher lows and lower lows, as you can see. And then the market is bearish, you should always follow the trend. So the market was crashing, market breaking this structure right here, breaking this structure, mitigating this demand right here. As you can see, mitigating this demand and kept on crashing, mitigating this demand and kept on crashing. As you can see right here, again breaking this structure, again breaking this structure, breaking this structure right here and kept on crashing, breaking another structure right here and kept on crashing, mitigating demand after demand, demand after demand, demand after demand, demand after demand. The market was mitigating demands after demands. So when the market came and gave me this break of structure, after this break of structure, as you can see right here, this high, as you can see, this is the highest high that the market made before it's selling and breaking this. So this is the high, this is the low that the market made. As you can see, this is the low that led to this high, that led to this high, but this is the high that led to this low that broke this structure right here, that broke this structure right here, as you can see. So when the market did that, I wanted to create another high right here, which it did. After it created a higher high, then it came and created a low which broke this low, as you can see, which broke this low right here. So after I saw that, after I saw this break of structure right here, I was looking for my areas of demand. So as you can see, this is my area of demand. So where's the selling start? Where did the expansion start? this expansion started from here. As you can see, the expansion started from here. So when I saw this expansion to the downside, I knew I had to find my levels of supply. So this is my level of supply right here. I marked my level of supply. As you can see it here, when the market find its way up there to my demand right here, when it reached that demand, I actually went to the lower time frame. Which is the 5 minute. After the mitigation, I went to the 5 minute. After I went to the 5 minute, as you can see, I was looking for a shift in structure to the downside. So you see market breaking highs here, breaking highs. So when it reaches this level of demand, I was looking for my areas of shift in structure. So let me delete this and explain it to you. When the market reaches this level of supply, if you know the knowledge of market structure, you can see what I'm seeing here. When the market was bullish, I was looking for a sort of market structure shift or change of character. So market was breaking highs. You can see it here, breaking this high, then again breaking this high right here. And you know, before a market creates a high, it was always create a low for it to reach that high, as you can see. So this is my low right here, this is my low, this is another low right here. I was looking for a shift in structures in either of those two areas. So when the market actually came, when the market made this high right here, when the market made this high, from this high, low, high, low, high, low, shift in structure, as you can see, these are my areas of in structure, because this high couldn't break this high right here, couldn't break this high. Since I saw that it couldn't break it, I knew that we are going down. So I marked my shift in structure. I marked my shift in structure to the downside, and again market broke, market change character again right here. As you can see, this is my major change of character, this minor change of character. So this is my major change of character. When I see we had a major and a minor shift in structure, I was confident that we are going to the downside. So what I did is that I take my Fibonacci level, I take my Fibonacci tool from the high to the low to find my level of interest. So where is my level of interest? Where is my level of interest? We have the 61.8 level, we have the 71.6 level. So the market tends to move always from the 61.8 level. It doesn't usually reach the 71.6 level. So me knowing this from the recent behaviors of the market that I seen every day, coming to the market, seeing it, coming to the market, seeing, I knew the market maybe could reach the 71.6 and maybe could not reach the 71.6 level. So what I did is that I took my Fibonacci from up, down, take it. So I'm looking for a fair value gap, an order block, or anything that can correlate to my 61.8 level. So what I found this level of demand. We have a long wick with a small body. I could take the body, but the candle is very small, so it did not take too much for me to take the whole candle. So I took the whole candle. And why did I took it? Why did I took the whole candle? Because I have a liquidity. I have a liquidity above my entry. So you see right here, we have this swing high, and we know, and everybody knows where liquidity is. Liquidity is always at equal highs, equal lows, swing highs, swing lows. So this is a liquidity. So when the market came, when I saw this liquidity, I knew that we could get a reaction from the 71.6 level. As you can see, the market reacted. the market reacted from the 7 to 1.6 level before reaching the 6 to 1.8 level. And you see, the market didn't reach the 6 to 1.8 level. It retraced at the 50% level of the Fibonacci. So I know we must come back to the 6 to 1.8 level, and the market moved and rallied up the way. You see it right here: high, low, high, low, high, low, high, reaching all the way to the 7 to 1.6 level, and my entry was at the 6 to 1.8 level. So what I did is that let me delete the Fibonacci and show you. What I did is that when I want to take my entry, since I found the liquidity that I was looking for, right here, as you can see, you've seen the liquidity right there. The market came and grabbed the liquidity. So after I saw the market came and grabbed the liquidity, I know this market might come to my entry, and it might not come, because the liquidity has been grabbed. And the market, when it's grabbed liquidity, always tend to move. When the market made this movement, I knew that I was gonna miss the trade. But for some reason, I didn't close my order. When the market took the liquidity and started selling, I didn't close my order. I waited. I didn't close my order because at that time I was doing something else. Maybe I was doing something. I was checking my phone. I didn't see the liquidity grab, but the market grabbed the liquidity and started falling, and I thought I missed the trade. But the market moved back all the way to the 7 to 1.6 level and tapped the 7 to 1.6 level and tapping the 6 to 1.8 level, which was very, very happy with the result that the market gave. I took my entry from the supply zone. Right here, putting my stop loss at the swing high, and targeting all the lows right there. You see it. Let me go to the 1 hour, targeting all the way down, all the way down to this swing low. And everybody knows where liquidity is always a swing lows, swing highs, equal lows, equal highs, trailer liquidities, a trailer liquidity, everything. So I took my stop loss, I took my take profit all the way down there, as you can see. And my entry right there, and my TP right there, all the way to the lows, as you can see it. And the market come actually and hit my TP for a 1 to 12. I made a 1 to 12 on this trade, not a let me see, this here 1 to 10. My stop loss wasn't this big, I think. I don't know what's the problem, but my stop loss, I think, wasn't this big. I don't know why it's showing a 1 to 11, but I think my stop loss was somewhere around here. My stop loss was somewhere around here. Let me actually look into it. Yeah, well, my stop loss was actually around here for a 1 to 12. For a 1 to 12 risk to reward. In actually how many days? Let me see. And you see the level of discipline. The market, when it mitigated me, it was consolidated like crazy. The trade almost took, I think it took 4 days and a half. 4 days and a half for it to actually hit my TP. So you know the level of discipline and patience you have with this kind of setups. I could have refined my entries and found entries when the market was consolidated right here. I could have found entries and other entries, and I've seen them, but I didn't take them because I don't actually re-enter when I'm inside a trade, because when a trade hits your stop loss on the lower time frame, it's actually reducing the profit that you're gonna make on the actual trade. So I didn't re-enter any trades from the point of interest for where I took the trade. I didn't re-enter, but I have so many areas that I could enter from. So this is the whole breakdown of the video. If you like the content, if you like watching it, if you find it helpful, like if you find it knowledgeable for you, and you find my strategy helpful and you want to learn it, just send me a DM on my Instagram. I'll be leaving all my socials down the description. I will leave all, and I have a Telegram group also. I will leave it down the description. And if you want to trade, here I'm trading the synthetic indices. I think some of you know the synthetic indices, the V75, B50, V100, all of them, step index, crash and boom. If you want to trade these synthetic indices, I will leave the link down below, so you can create an account and DERIV it on DERIV. You can create an account, join the broker, do everything, log in, and you can make money also from this. I will put the execution of the trade somewhere on the screen so you can see it, so that you can see that I took the trade and I made money. And if you want to make money with me, just join my Telegram group. And I trade crypto, so if you're interested in trading crypto, I'll put it down in the description. So love, peace and tweaks, signing out guys.